That's right. Good morning and welcome to a slightly belated stock market weekly recap. We didn't forget this week, okay? It's all right. Really haven't been off work at all this weekend, so I've been there pretty consistently, so I didn't have time to record this one. So we're making up for it. We're releasing it Monday. What's wrong with that? Nothing too bad. So we're going to talk about our portfolios, Robinhood, then M1 as we do. I have a little new segment for us today after that, and then we'll be getting into the indices as well as news. News. Not a whole lot of news this week, but that's okay. So as far as the Robinhood portfolio on the week, we were down 2.12. It was just a really bad Thursday, Friday, as everyone really can attest to. Things were kind of rough for us. They were rough. There's no doubt about it. So overall down 450, but brings us all time up $6,411 or 44.53%, and that is since July of 2017. So good. Still sticking over the 20,000 mark, which we'll take. As far as moves this week, there's nothing too crazy, but there's definitely some stuff to cover. Obviously, we had Apple's 4-for-1 stock split, so now I have 20 shares worth of Apple as opposed to the prior 5 I had. So 4-to-1 split, baby. We had the Wisdom Tree Small Cap Dividend Fund DES pay 15 cents. Again, I only have one share of that bad boy, but no, nothing massive. That got reinvested. I bought $100 worth of Target stock, or the equivalent of 0.66 shares. Nothing massive. My cost basis is still super low, so I didn't want to go all out on that. I bought $40 worth of KBWD. KBWI also bought $40. SPHD paid $1.42 in dividends, which got reinvested for 0.04 shares. I also bought $40 of ABR, or the equivalent of 3.56 shares. I love that company quite a bit. Wish I'd bought more on the mega dip earlier. That's all I can tell you. So that's it for the portfolio there on the Robinhood aspect. As far as the M1 is concerned, we're over the $14,000 mark, which is nice. I love to see it. On the week, down 1.99. All-time money weighted up 58.04. That's including dividends, obviously. But if you look at just the positions themselves, I'm up 18.69%, or $2,229, and that's since July of 2018, believe it or not. So, quality stuff. We like to see it, and the dividend numbers are going to keep climbing with this. That's what I'm all about. As far as activity, Pfizer paid a dividend of $2.57, and Intel paid $1.63. Nothing too crazy. Obviously, the 401 stock split as well. SPHD paid a dividend. Gladstone Capital paid a dividend. Arbor, ABR, paid a dividend as well. Good to see that, and just the normal morning trades on Monday. Nothing massive, really, at all. Now we have something slightly newer. And we like to see it. So, I have linked, obviously, my NASDAQ Smart Portfolio here, baby. So this is a pretty nice app, website, whatever you'd like to use it for, where you can link your portfolio, and it'll tell you anything as far as like your holdings, news, as well as the calendar, which is obviously the main focus of this segment. It's going to be the calendar, see what's coming up in the upcoming week for me. For me, all I have this upcoming week, it's not a massive one. It's just going to be the ex-dividend date on HP, as you see on your right-hand side. Ex-dividend date on the 8th for HPQ. So, good to see that. Next week we have some more, and you can see beyond there, and we'll get into that in a little bit. So, hope you enjoyed that. That's what I got. We'll do that every week. So as far as the indices, the Dow Jones was down 1.82 on the week. Year to date, back into the red, down 1.42. Nothing crazy. I mean, you don't anticipate it being super positive with everything going on. So crazy that it is where it's at, nearly flat. The S&P 500 was down further, 2.31. So we did outperform the S&P 500 on both portfolios. Good to see that. Year to date, S&P 500 is up 6%. Pretty crazy, still good numbers there. And the Nasdaq got hammered hard. Obviously, tech got hit big Thursday, Friday. That was a nice neck crack. Tesla got hit big. Tesla did get hit big, but tech got hit big Thursday, Friday. So overall down 3.27, but still up 26% on the year. Pretty crazy. As far as news is concerned, the S&P 500 posted its best August since 1984. Typically, not the best month. September's usually a way worse month, actually, for the market. So we'll see how this goes. Obviously not off to a hot start. I can't lie to you. But best August for the S&P 500 since 1984. Pretty crazy. We have Tesla raising $5 billion of capital. Obviously, the stock fell down a little bit. But that's a lot of money, and obviously, I don't like that. I don't like companies usually raising that much capital, but I get it. Makes sense. They need the money, and they can get the money whenever they want. AT&T is looking into selling its Xandr digital ad unit. Interesting. Obviously, it's a company definitely in focus of everything going on as far as remodeling. They're really on remodel right now. It feels like trying to get rid of DirecTV, Xandr, app unit. We'll just see what the future holds for this company, right? We'll see it. I'm excited. We have Apple delaying the iOS privacy change. It will delay the enforcement of a privacy change to its mobile operating system, which is obviously a controversial move. So we'll see how that goes if they actually are delaying it, which I assume they are. And we also have the Justice Department pressing an antitrust case against Google in the coming weeks. Again, I'm not a huge fan of these antitrust cases for the most part, because I know a lot of these companies, if they try to blame for it, they're not monopolizing really anything. Google is not monopolizing the market by any means. They're just the best company to do it. So I don't think that counts as monopoly, and they're not necessarily in too many segments to where no one can compete. That's my opinion on the matter. But regardless, that's what I have for you this week, and I certainly hope you enjoy.